Hello, everyone, and thank you very much indeed, first of all, to Li Gang for that extremely interesting presentation on the perspective of the People's Bank of China on these very important issues. And obviously, given the crucial role that China is playing in respects to this innovation, they are obviously going to be very closely watched around the world. However, China is not the only country that is grappling with these questions of what to do with big tech, regulating big tech, and the intersection between financial regulation, antitrust rules, data privacy, and so on. On the contrary, almost every country in the world is dealing with these issues now. And so we now have perspectives from 5 different governors from around the world about how they see the challenges that Yi Gang has laid out, what they are doing within their home markets and jurisdictions to deal with it, and where they see the future going. We have Governor Roberto Campos Neto of Brazil. We have Alejandro Diaz de Leon from Mexico. We have Klaus Knot from the Netherlands, who is also head of the Financial Stability Board. We have Noor Shamsia Man Yunus from Malaysia and François Valoura de Gallois from the Banque de France. So a very good global perspective. And what we're going to do is ask each of the governors to speak for 5 minutes about how they see the situation in their own countries, what type of solutions they are looking for in response to these very serious questions. And then I will open it up to a series of questions from myself and aim for a debate and dialogue between them about how they see the future unfolding. So I'd like to start, please, with Roberto Campos Neto, Governor of the Central Bank of Brazil, to ask him how he sees the current situation playing out in Brazil. The floor is yours.
Well, thank you very much, Lilian. I want to also say hello to everyone and to all the participants, to Governor Alejandro, Governor Klaas, Governor Noor Shamsia, and Governor Francois. In the case of Brazil, I think what we are trying to do from the very beginning is try to be forward-looking in a way to see where this innovation is going to lead us to. And it was very clear from the very beginning that it was a lot, it revolved around concentration of data and the importance of data in financial intermediation. So what we started to see was that what we should be looking at preventing that verticalization in some way would give rise to a lot of concentration in data. What we saw was that there was what we call at the time the run for the gold, which is basically big tech companies trying to have text, content, and payments together. And those done in a vertical way would produce an enormous amount of data. And we were worried that if you had all the chain from the sales of the product being advertising, sale, and payment, and also the texting, you would eventually create a system where you have uncompetitive behavior. So the main thing for us was to anticipate what we already have in our table, which was to introduce PIX. So PIX was supposed to actually be launched a year and a half later. But as the pandemic started to kick in, we started to see that all this online payment was going to be very important. And so what we did is we anticipated PIX by around a year and a half. And PIX is an instant payment that basically, for us, it was a result of a study in which we look at what actually people wanted out of a payment system. A lot of the surveys, what we had is people want something that was cheap, fast, secure, transparent, and open, especially around young people. So we anticipated PIX, and it was very important to make sure that we have a common level ground in competition, and that we have a lot of people that would be able to use it. But at the end, what we envisioned was a convergence of every single measure that we had. So we designed everything to converge in 4 or 5 years. So on one way, we have an instant payment system that would actually put a level ground for all the companies to act. On the other side, we would have the open finance system. And the other side, we also have the digital currency. And when we thought that the PIX would actually address the competition element in the beginning. Then the open finance would make sure that whatever data was accumulated, that the data was actually used in a way to create competition. And also we're seeing that this was evolving into this DeFi world. And for us, the only way to keep everything under the regulation of the same umbrella was also to advance with the digital currency, which is what we're doing right now. So at the end, when we look forward, what we have is this convergence between a system of instant payment that will converge into something that will be very widespread, lowering the cost of financial intermediation and the cost for, and lowering the barrier of entry for different players. Then we're going to have the open finance, which is now becoming very, very inclusive because we're actually having a lot of different products being put into the platform. Even health, for example, health plans will be put in the platform. Everything in which data creates asymmetry will be put in this platform. I think this actually is going to expand into other areas. And then finally, the digital currency, which we are advanced. There was a lot of things that we needed to solve to make sure that the digital currency was not going to be disruptive for balance sheet of banks. So those all meet at some point, which is in about 1.5 years, 2 years. And we think we are just at the beginning. When you look at PIX, for example, I think we have so many new features to introduce and so many new things to do that we think we will still have a lot of time to design a system around that in which the end message is that we want to make sure that we don't have production of data that will develop into a way in the future that will make the system uncompetitive. Thank you.
Well, thank you very much indeed. Before I hear about Mexico, I'd like to quickly just ask, for the benefit of everyone who's watching, for a bit more detail, because it's fascinating. You've tried to deal with the risk of a private sector monopoly by essentially creating a level playing field to ensure competition, both of different platform types, but also inside each platform. Who actually owns PIX? Is that a government-owned utility? Perhaps you can explain to the audience. And when you talk about a digital currency, do you have in mind a CBDC or privately created digital currency? And what does this all mean for things like WhatsApp or the other private sector providers like Mercado Pago?
Okay, no, so the PIX is only a settlement machine, right? So the PIX is a central machine that actually settles everything and it stays at the central bank. But I think it's a very fair question. You know, why did it need to be developed by the central bank? And we ask ourselves this question many times, and there was a lot of doubt around it. But we thought, looking at what's going on in other places that were more advanced than us, what we didn't want to happen was market fragmentation, and we wanted to make sure. And looking at other projects that we're doing, that when you do start a project like that, the main problem, at least in the case of Brazil, is when you don't have an integrated technology solution. When you just give the guidelines and everyone finds their own technology solution, when you're trying to integrate that, it becomes very difficult. We had a problem, for example, doing receivables. And when you try to integrate all the receivable platforms, everyone had a different technology solution. In the pilots, it works well, but when we actually scale up, it becomes difficult. So for us, it was important to have that. So it's owned by the central bank. It's becoming an amazing phenomenon in Brazil. I just had yesterday a report that 40 million people did their first transaction on PIX. So they never did any electronic transaction, and because of PIX, they actually started using it. PIX is very easy to use because it's integrated on your agenda on a cell phone through the app of the bank. So it's as easy as, you know, getting a contact for your agenda. So the real thing that's really important is that it needs to be user-friendly, and you need to make sure that the general guidelines forces the banks, or at least gives an incentive for the banks to make it very user-friendly on a common way, so that even a small platform that's becoming a bank will have the same facility to use PIX as the others.
Well, that's fascinating how you have the government stepping in to address potential market concentration risks. And I'd love to hear from the other participants what they think about that. Just very quickly, digital currencies, since you mentioned it, do you have in mind a CBDC or privately created digital currencies? And then I want to hear about Mexico.
No, what we have in mind is a CBDC in the traditional format. The problem was that when we were advanced with the design, and I think every central banker and every central bank is having the same discussion. You want to make sure that you don't compromise the banking system. So there's all these issues around narrow banking. So what we needed to do is to build a solution to go around that. And so one of the solutions to go around that is actually that banks issue stable coins on their own deposits. And this is backed by CBDC issued by the central bank. So in a way, you have the two living together, but it's not going to be a stable coin in a normal sense. What we can do is have the stable coin as a solution to prevent narrow banking and to make sure that whenever you go from M0 to M1, you still have the banks functioning in the same way when you transform that into digital currency. Thank you.
Well, thank you. That's fascinating. And you've laid out a lot of the themes we're going to be coming back to in our conversation later to do with the role of digital currencies and the way that, central banks and the public sector can or cannot counter the market concentration risks. But let's hear about Mexico. The Central Bank of Mexico has been doing some very interesting things as well. Tell us, please, about what you've been doing, Governor de Leon.
Thank you, Gillian, and let me thank the BIS for inviting me to participate in this panel with my colleagues that I dearly miss seeing them in person, and I send them my best regards. It's an honor to be with them. I think it is key to discuss how the entry of big techs in payments and finance and the implications for competitiveness and the challenges that it presents for central banks. Recent advances in technology and innovation have created the potential for a structural transformation in payment and financial services. We may call about the appearance of platform payments and platform finance that was discussed yesterday. The inclusion of networks with a wide customer base in the financial ecosystem, the so-called big techs, seeks to link customers with financial services, either provided by financial intermediaries or themselves. And this part, I think, is crucial because it raises the key issues for public policy in terms of competition, consumer protection, and financial stability too. An open finance ecosystem could have several benefits: better services, lower costs, and deeper financial inclusion. But authorities should be careful to avoid potential suboptimal results that could come from concentration, vertical integration, and lack of interoperability. And I think Egan was mentioning some of these challenges. An open finance ecosystem without adequate regulation will not deliver the desired public goods. Big techs providing payment and financial services are clearly part of our financial ecosystem, and we must work on have the necessary technological and regulatory conditions to avoid regulatory arbitrage. And I think it's very important to be very clear that a level playing field is not against innovation. Instead, it is a response by policymakers to avoid the trend to have winner-takes-all kind of equilibriums that comes from networks, or the too big to regulate problems. These, I think, are conditions that we need to promote competition, sound risk management, and public interest. To promote a well-functioning payment system and a more inclusive and efficient financial system, and to make a good use of the opportunities offered by new technologies, we have identified 7 public anchors to guide this process that we have been applying. One is same risk, same regulation, aligning incentives to achieve maximum social benefits, addressing market failures, and promoting an environment for competition, with a level playing field mindful of AML-CFT requirements, legal, financial, and operational risks. 2, interoperability and neutrality. We need to avoid large networks using their condition as competitive advantage to carry financial transactions exclusively through their networks. 3, no kingmakers. Large networks joint venturing with specific financial institutions could extend the former's market power and concentration to financial markets. This is clearly undesirable. 4, ensure business continuity with large foreign providers. We all see that the failure or missteps of fintech or big tech could have substantial spillovers. 5th, global coordination to address jurisdictional gaps. 6th, strong client protection architecture. And 7, a strong cybersecurity framework. The Mexican financial authorities are working on the adoption of these policy anchors. But one of the cornerstones for a healthy, open financial and payment ecosystem is a safe and robust infrastructure. And central banks play a key role, and we provide actually a 24/7 RTGS system that it has grown very rapidly on the retail payment levels. And these four key elements are: one, a robust infrastructure for clearing and settlement, which is imperative for this architecture. Second, strong authentication and validation infrastructure. This is key, especially for the financial inclusion area. Three, plug-in arrangements such as APIs to provide access to new participants to the network, including big techs. This open architecture is crucial. And capacity to operate ledger services as requirements, in order to provide CBDCs and other type of services. Another involvement of big techs in the financial system that central bankers must evaluate is the provision of back office services to the financial system. A clear example is on cloud computing that could entail business continuity and systemic risks. And I think this was also addressed yesterday. I conclude stressing that developing an open payment and financial ecosystem safeguarding public interest should be at the top of the local and international agenda. Adequately regulated big techs and large customer networks could help promote financial inclusion in three key dimensions: payments, investing, and financing. Payment systems are inherent to central bankers in their provision of money. Leveraging on the latest technology and developing fast retail payments and CBDC are of utmost importance for central banks. Thank you.
And I'm curious, so you talk about the potential benefits of big tech in terms of financial inclusion. Are you actually seeing tangible benefits at the moment in terms of what big tech is doing in Mexico? And in your view, are there actual tangible examples of harm and danger that you're wanting to contend? So I'm talking about what's actually happening on the ground right now, not the theoretical issues.
Well, I would say that there are a lot of, there has been projects to basically link big techs with commercial banks. That was why I was mentioning that it is important to avoid these kingmaker type of potential projects. Sometimes short-term efficiency gains may find a way that not necessarily is consistent with the best equilibrium. And I think we have steered in order to have these big tech involvements in a level playing field. And I think Igan was mentioning this. We need to not to only transact with their own networks, not only transact with one or two banks or financial institutions, but to have an open architecture. And for this, we have provided, I would say, the key rails in the system, which is our own, developed by the central bank, RTGS retail payment system that works 24/7, and it has grown exponentially, especially in the last years. So I think providing the rails in an open architecture has allowed for this interaction and involvement of these big techs with level playing field.
And do you see any financial stability risks at the moment from all this?
I think that we need to be mindful about them. I think that there is the tendency or the trend to think that big techs doing financial services are not really part of the financial system. I think we should be mindful of that. I think if they do financial services, they are part of the financial system. And we should be mindful about how they are working, how they are operating, the type of operations that they are doing, and also the potential risks. I think even this week, we were reminded about some operational contingencies that we should be aware of, and that could eventually have systemic consequences. So they should be clearly on the table regarding financial and systemic risks.
Well, thank you very much indeed. I'd like to bring in Governor Knott here because obviously the BIS and the FSB have been writing reports on what's happening, looking around the world at the lessons from places like Brazil and Mexico. When you hear about the experiences we've just been listening to, do you think it's time to try and codify some rules and guidelines from the perspective of the Financial Stability Board? And how swiftly do you think the community is actually moving to really address these issues?
Well, thank you, Gillian, for this, I think, very relevant question. And this is actually where I think also the FSB comes in terms of having its main value added. Let me first also echo what Alejandro said and say goodbye to my colleagues. It would have been much better if we had a face-to-face meeting, but a little bit more patient, and then hopefully we can get there again. So what is the FSB doing in this area? First of all, it goes without saying that, of course, the expansion of big tech into financial services is a big development in the financial industry. But it's certainly one for the good. It has given rise to financial services that are cheaper, that are more convenient, and that are also more tailored to users' needs. And that, of course, offers opportunities to improve customer welfare and even to support financial stability. I think both Roberto and Alejandro have also given some examples to this extent. It can also bring benefits to financial institutions. It provides more advanced technologies and infrastructures, and through partnerships that can be beneficially for all. But the FSB already in 2019 wrote a report in which we did point out that there are clearly also some risks attached to big techs becoming dominant providers for both to financial stability, but also to competition. Well, Alejandro already referred to the events of this week, the global outage of Facebook and WhatsApp. And that could, of course, have broader implication for cloud services. Financial institutions increasingly use cloud service for computing and data services. But if you zoom in on sort of the global dispersion of cloud service providers, there are only 3 or 4 of them that actually act globally. And if the services of one of them suddenly stops, then of course that would mean trouble for many financial institutions simultaneously. Now, we looked at this problem already 2 years ago. At that point in time, we concluded that it's hard to find immediate financial stability threats, but we did at the same time encourage national authorities to examine the adequacy of their existing rules and supervisory practices. In Europe, we will have the Digital Operational Resilience Act on its way, and the FSB is very closely following initiatives like this. This is one question. The other question, of course, has to do with market dominance. The amount of resources that these big techs can bring to the table very quickly sort of bring them into a situation of dominance. So what does it mean for competition? And what does it mean for the existing business models of banks, for instance? And that's part of a recent scenario study that we also did at DNB. If we want the financial system to stay safe and sound, can we also continue to assure that when part of the services are provided by entities that are no longer controlled by licensed and sort of supervisory authority? Does it mean that we have to bring big techs perhaps under supervision? Well, this is clearly not a theoretical exercise. If you look at payments, for instance, there big techs are already quite important, particularly also, I would say, in emerging market and developing economies. And that was the subject of another study that the ECB very recently, that the FSB very recently issued. There is a large market of people with limited access to financial services. Big techs do play an important role there, but also there we have to be mindful. Some of the risks were also reinforced by the COVID-19. We were all proud how quickly we could move to a digital world, remote working, etc. But it may also have amplified some of the risks involved. So what does it mean for financial regulators? Well, first of all, of course, that we have to keep our eye on the ball. It's a fast-moving space, which means that the research and the reports that we did 2 years ago may actually already be outdated. So we need to revisit our findings. We need to do that regularly to make sure that we capture the changes in real time. We also need to re-examine our regulatory framework to respond to big tech risks to financial stability and competition. Many of the issues that I talked about extend beyond our traditional financial sector knowledge, and therefore we need to reach out to a different set of stakeholders, a different set of supervisors, notably in the field of data protection, competition, and cyber risk. Well, a final remark, dialogue is always a two-way street. On the one hand, it can help us to learn more about the newest development. But on the other hand, we have laws in place that continue to apply to all activities, even the coolest of all technologies. And big tech, by entering the financial industry, will have a big responsibility to keep the financial system safe and sound as well. Dialogue can help us both understand what the risks of financial stability are all about and why it is important to protect it. So let me stop here.
Well, thank you for that very comprehensive overview. I'm curious, you said you needed to coordinate with new actors and new players. Do you actually have any forums where you can actually meet and coordinate? And which ones in particular are you talking to in relation to, say, data privacy issues? Because this is a new area for central banks. Traditionally, central banks have sat in the sort of money silo. And I say that having written a book about silos a few years ago. How do you break down these silos, and where do you break them down?
Well, this is actually a very pertinent question to which, of course, we don't have a complete answer yet. Several regulators have already taken action on big tech to safeguard financial stability and sort of antitrust and data protection issues. And there, a first question that I think has a broader sounding than just in this space is always, do we need an activity-based or do we need an entity-based approach? That has been a long-standing issue in financial regulation. And probably we will need to have a mix of both, because it is about activities on the one hand, but on the other hand, you can't find an activity. You can only find an entity. Systemic consequences usually take place at the entity level, not at the activity level. Then there is the need for greater coordination with types of authorities that historically we have not liaised with all that much. Now, on the national level, it's not very hard to organize. In the Netherlands, we already sort of have our sort of regular meetings with the privacy authority as well as the authority for consumer and markets. But on the international level, we don't have a natural counterpart of, let's say, a global privacy regulatory forum, and also antitrust coordination is relatively limited. So I think that this is something that we need to work on. I do think that the FSB is a very logical springboard to get this going. And this is also something that we have to put very high on the agenda, because it's clear that we have common cause here with regard to big techs. But at the same time, there may also be policy trade-offs once we start regulating. So international coordination will be critical going forward, but we will have to strengthen the sort of dialogue also at the global level.
And just quickly, before we move on to the example of Malaysia, I mean, the only place where there is really effective dialogue about data issues or technology issues in the computer world at all is the United Nations, from what I can see. So do you think it's time for the FSB to start talking to the United Nations bodies? Would you simply create a branch of the FSB around data privacy in relation to big tech issues? I mean, where would you even start going to try and create this?
Well, this is actually a very good question. I mean, the FSB is in a way a flexible organization that has always adapted its organizational structure to new challenges. Look at the way we dealt with climate risks and the TCFD, the financial disclosure templates, etc. Also there, we had to set up new structures to enter into a dialogue with authorities that we hadn't dialogued with before. Now, thus far, we have very much looked at these issues from the perspective of financial innovation in our financial innovation network. But the more pertinent the issue becomes, the more permanent also the structures should be that we set up to dialogue, to liaise with other authorities. And yes, perhaps if the United Nations is one of these authorities that we need to have a dialogue with, then one of our standing committees should probably have a substructure where this dialogue is going to take place.
Well, that's a very interesting set of issues, which I'd love to come back to later on, and also talk very specifically about financial stability. But before we do, I want to hear about the experience in Malaysia with Governor Yunus, talking about how big tech players like Grab have been building up ecosystems with their digital wallets. We've actually got some big techs now applying for digital banking licenses. I'm curious about what this means in Malaysia and how the central bank has responded, whether you've taken similar kinds of approaches to what we've seen in Mexico and Brazil.
Thank you, Gillian. Let me start by wishing everyone a very good evening or morning, and to thank the BIS for this opportunity to share the stage with such esteemed panelists. Well, to start, I would first like to paint a picture of the Malaysian landscape. And as what we see globally, digital services and platforms provided by big techs have grown to define a significant part of Malaysia's digital lifestyle. Big techs form the foundation of our digital lifestyle across communications. I think about 92% of Malaysians use WhatsApp. And there's also fast growth in e-commerce. Most of our Malaysians are online shoppers, and they use platforms such as Alibaba backed Lazada and Tencent backed Shopee. And the connectivity in Malaysia is also very high, with nearly 92% using Facebook. So building on their established market presence, big techs have started to venture into financial services over the past years, with payments being a common entry point. And this is because of its lower complexity, universal demand, and lower trust barrier. And in Malaysia, developmental policy have also eased the entry of big techs into payments. This includes policies that foster interoperability through a common national infrastructure, similar to what Brazil have, and an open entry policy for new entrants in payments. To illustrate this development, payments processed by big techs in Malaysia, it has grown by about 170% since the pandemic began. And this has outpaced the overall growth in e-payments of about 20% in the same period. But in terms of absolute value, it only accounts for a marginal portion of the overall value of e-payments at less than 0.2%, with online banking remaining the dominant method of transferring value digitally in Malaysia. So beyond payments, the extent of big tech disruption in other financial services is still limited at this juncture, especially when compared to other countries. For us, this reinforces the idea that the impact of big techs in a market is multifaceted and depends on factors such as demographics, size of the market gap, the strength of the incumbents, and consumer satisfaction, among others. So in Malaysia, we observe that the high level of financial inclusion and a core of strong and competitive incumbent financial institutions have so far narrowed the disruption potential of big techs. But nevertheless, as new business models surrounding big tech emerge, we do face the onerous task of responding to policy disruptions beyond our regulatory boundaries, as per what Klaus have said. And this is compounded when it involves unclear or overlapping regulatory parameters across authorities. And this calls for central banks to act as advocates for holistic policy responses by the broader public administration. And for Malaysia, this has manifested itself in three recent areas. First, the provision of services which transcend regulatory boundaries, such as digital assets, which calls for coordination across different authorities. So we have worked closely with the Securities Commission of Malaysia on this to clarify respective areas of oversight based on use cases. And this has promoted a more cohesive approach to regulating digital assets with joint arrangement to signal a united policy stance in managing risk from various users of digital assets. Second, the emergence of business models outside the existing regulatory scope that may compete with conventional banking, particularly buy now, pay later in retail lending. So what we have done is we have advocated the introduction of what we call a Consumer Credit Act, because the growth of this outside the banking sector can harm financial consumers, and if it's not regulated properly, that you would have risk to ensure that there is minimum protection and fair treatment of borrowers. So these are some of the areas, Gillian, that we are doing currently in Malaysia.
Well, that's fascinating. I mean, in some ways, you are grappling on a national level with the problems that Governor Knut outlined in terms of who do you talk to if you want to try and coordinate policy beyond the central bank. So just to pick up on the question I asked Governor Knut on a kind of international level, who exactly are you speaking to inside Malaysia? Is there someone for you to talk to about data privacy issues? How do they react if you come along as central bank and say we want to coordinate with tech and finance? I mean, what is the actual mechanism that you have to have a joined up conversation around these issues?
Well, we are lucky because we do have a history of collaborating with relevant parts of the government. So we have a long-standing history of collaboration and having a seat at the table. So in terms of data privacy, for example, so our current priority as it is now is to have active collaboration with the government on data regulations, focusing on strengthening data protection, consumer consent and ethics, and with other stakeholders to ensure that institutions keep pace with an ever evolving data ecosystem. So this is something that needs to be done on an ongoing basis, and for us to keep the dialogue going with the relevant, and for us would be our the multimedia regulator, the regulator for the telcos. We have also a data commissioner, and that is talking about having such data privacy act. So these are some of the bodies that the central bank would need to collaborate with to address this issue of data privacy.
Right. It must be a fascinating exercise in cultural experimentation inside the government structures of different countries right now, because these are not institutions that normally talk to each other. They may not speak the same language. Certainly, speaking as a journalist is a challenge for us in the media because we have silos that reflect the silos of the world we're covering. And so it's not always easy to try and bridge that as well in our coverage. But I'm going to come back to this issue later on. I'd like to turn to the experience of France right now, because we've been talking primarily about big tech and digital payments thus far. France, the Banque de France, has been at the forefront of those looking at central bank digital currencies and the question of cryptocurrencies, with probably rather more imagination and a policy proactive action than some of the other G7 countries, let me say. Tell us how you see things developing from your perspective from the Banque de France in relation to cryptocurrencies, DeFi, decentralized finance, and CBDCs at the moment.
Thank you very much, Gillian, and hello to everybody. My first reaction to your question would be to say there is no such thing as a cryptocurrency, and you will not be surprised. There are crypto assets, and there are very interesting innovations, by the way, linked to blockchains and to DeFi, decentralized finance. It can be the best of things, it can be also the worst, and it's probably our task to build the better of two worlds. Innovation obviously is positive. It increases competition, customer services, financial inclusion. But if, I stress, if left unregulated, innovation can decrease financial stability, and there is also an issue of market concentration and of customer protection. So we should be extremely clear about our role as regulators, and I agree with many things which Klaus, for instance, said. Our role is obviously not to stop innovation, be it at the Banque de France, in Europe, or at the FSB. It's to build trust in innovation. And in that sense, I think there is no contradiction between regulation and innovation. in the long term, the convergence is, and the precondition is building trust. Coming to your questions, I said there is no such thing as a cryptocurrency, because obviously if you take Bitcoins or its brothers, it's not a currency. The characteristics of a currency are A, to have a value which is stable and predictable and guaranteed by central bank, and B, to be a universal means of exchange. And for these two criteria, obviously it's not a currency. These are crypto assets. They can be very unstable, so the issue of customer protection is very important. We need regulation in this field. In the case of Europe, it will not be prohibition. It's a MiCA proposal by the Commission, which is a very welcome first step, but we should adopt it quickly and we should enhance it, because if we look, it has been proposed 1 year ago, Gillian, September 2020. If we look at what happened since, there has been a significant acceleration in Defy, and so there are new actors, sometimes unknown, which probably we need to include in a new or in an enhanced MiCA. Another question, because you mentioned it, also is stable coins, and I guess it's a bit different. Here it's probably more promising to improve cross-border payments, for instance, which are too often slow and expensive. It's promising to increase financial inclusion, but it also brings risks. Think of a stablecoin run, which could happen if investors lose confidence in their token. I won't quote any private name of any specific big techs, but we are all aware of some projects. So we need regulation again, and perhaps two quick reflections. First, it should be global as much as possible. We have a unique opportunity that we are all at the same point there. And if you look at Europe, Asia, the US, and elsewhere, we all have the same question. So could we use this opportunity to have a global regulation under the FSB sponsorship and not to have geographical silos? You don't like silos, never do I. It's easier said than done. We are not yet at this level of global governance, but I believe in the FSB power. And the second issue is about activity-based or entity-based. Klaus touched the issue. So the usual answer is that if we look at big techs issuing stable coins or what other financial activities, we should be activity-based. Yes and no. Because many parts of big techs don't have anything to do with finance. But it's very difficult to be purely activity-based. You need a legal entity. And obviously, if you look at the business model, there are strong internal relations, there are cross-sellings, etc. So could we look or study a mix of activity-based and entity-based? I think the study we did, or the work we did in the past about banks and their systemicity could help us. Could we study the systemicity of big techs and perhaps try to see in some cases where we can build a mix between activity and entity? To give an idea, but it's only an idea, could we consider the idea that when such big techs are systemic in payments, about their volume of data, about their financial spillover effect, we could consider organizing a specific legal entity within the big tech to regroup all financial activities, and this specific legal entity would be subject to financial regulation, financial rules, and financial supervision. To be studied, but I think we have to build something innovative. And last point, if you allow me, on CBDC, obviously, this is part of the game, the central bank being on the side of innovation. We were very active on wholesale CBDC. We are in the ECB, as you know, very active on retail CBDC, but we will not have the monopoly of innovation. We are part of the innovation ecosystem.
Well, thank you very much indeed, Governor Viljo de Gallo, because that's a very interesting overview. I'm curious, I mean, let's take a tangible example of something like Ethereum. Or its rivals Cardano or Polkadot, which are platforms which, because they've been designed as software companies, currently evade regulation by our financial authorities, and yet the software is increasingly being used by not just central banks, but private banks for various forms of DeFi. Can you envisage a world where something like Ethereum or Cardano would be regulated or subject to oversight from the Banque de France, if not on an international level, if they were doing transactions in France?
Your question is food for thought. Perhaps some preliminary reflections. First,
and I should explain, I'm asking about Ethereum because I happen to spend a lot of time recently looking at Ethereum, and often hear the comment from them and their rivals that we're just a software company.
No, never did I. But first, blockchain is promising, without any doubt. And if I look at Bitcoin or Ethereum, the blockchain technology is promising. We have it in the Banque de France and we develop it. The crypto assets are a different story, perhaps with less potential. These are very speculative, but the technology is promising. Second, as Noor and other colleagues said, this is the point where we have to go beyond silos. And you asked about the dialogue. In France, we discuss heavily with the cybersecurity agency. We discuss with the competition authority, a bit less perhaps with data protection, but it will come. So at domestic level, it exists. At international level, it's still to be developed. And perhaps my last reflection about your question is what I said about systemicity. And this is a new field. We were able to do it for financial intermediaries, for banks and even insurers in the last decade, after the great financial crisis. Probably for the next decade, our reflection should be about the systemicity of big techs or platforms like the one you quoted for global finance. And we are only at the start, but we cannot consider that it's completely independent from our mission on financial stability, because these actors will have a very powerful influence. And it's probably up to us to know whether this influence is positive or not.
Well, that leads me to another question. I'd like to ask you, Governor Villechaize-Relloa, and then the others, which is about reporting. I mean, as you said, in 2008, we discovered that although there'd been a big spotlight on the regulated banks' activities, the so-called shadow banks had gone largely unreported and unnoticed. Do you think there are similar blind spots in terms of how regulators are looking at the world today, because so much is happening in the digital sphere where the central banks are just starting to talk to other agencies, but pretty slowly compared to the speed at which activity is rising in the big tech and digital space? Maybe we can have the Banque de France perspective first, and then I'd love to hear from some of the other panelists, maybe Governor Knut, and then the others have got views on that as well.
Should I start very briefly?
Please do, yes.
No, my personal answer would be with a smile at this stage. Can I tell you something about all international fora we participate? At the end of the working group, there was always consensus saying we should develop reporting and we should fill the data gaps. So obviously there is room for improvement, but I'm not sure that in that field it's a first priority, because the landscape is evolving very rapidly. So if we define reporting or data consolidation, we will be probably overhauled next year or 2 years ahead. So for me, the first step is clearly to work together under the sponsorship of FSB and to understand the systemicity of these new actors. After that, the reporting part will be, I hope, quite easy to fulfill.
Dr. Knut, would you agree? Are you worried that the FSB might not know what's going on?
Well, yes, I would say yes. I mean, data gaps, I think, are always a key issue. And Francois just sketched a typical agenda of an international meeting. And I would add to that, that very often at the bottom end of the agenda, data issues come up. And then we get a lot of people around the table looking quite sort of difficult and explaining to us how complicated it is It is, of course, true that if you compare the wealth of data that we have on the regulated financial industry, and then you look at the data on big tech's financial activities, well, they're pretty scarce and complete. And that may make it very difficult to start effectively surveying the sector. But I'm afraid that there are no easy solutions here. I think it's inherent in the complexity of the landscape. We're talking about entities, but we're also talking about platforms. We're talking about interfaces. We're talking about sort of partnerships between big techs and financial firms. These are all quite new structures, complex governance arrangements, and that, of course, make it much more difficult for us to gauge potential risks when they relate to financial stability. So I guess we have to get our act together on sort of thinking, what do we want to regulate and what do we need to know? But then at the end of the day, at the minimum, you need a registration requirement to then also start collecting supervisory data from an institution. So it is a matter of regulation evolving. And then, of course, data reporting will be integral part of it in order for us to actually exercise our supervisory capabilities there.
Right. Governor Yunus, I'm curious, you came out with a number of statistics in your comments about what's happening in Malaysia. How much confidence do you have that you know what's happening on the ground in terms of these shifting trends?
Right. To the extent that the big techs are involved in payments, that comes under the purview of the central bank. And because it does come under the purview of the central bank, being a payment system provider or a merchant acquirer, so we do have the ability to collect statistics. And one of the things that we did, after the global financial crisis, was to strengthen our regulatory laws. And we also have the power to also obtain statistics for non-regulated entities where we think that the activities of that entity may pose a threat to financial stability. So we are able to invoke that power to compel, institutions that are providing financial services, if we deem that, the activities themselves, if left unregulated, creates regulatory arbitrage, poses risk to the fair treatment of consumers, or results in the build-up of financial imbalances that will give rise to give rise to risk to financial stability. So we do have that power to get such institutions to collect, to submit statistics to the central bank. And the other part is, having again strong collaboration with other regulators to have a dialogue and to share risk assessment. And for the central bank, for example, in Malaysia, we do have regular dialogues with the Securities Commission and with the other credit service providers like the credit unions, the regulators, to form a view what would be the risk. So this is something that we do have, and we are leveraging on these platforms to monitor the developments around big tech.
Right. Before I turn to Brazil and Mexico, which I will do in just a moment, I'd like to, though, also ask about Malaysia's experience with DeFi, because I was looking at data recently from a group called Chain Analysis, which has been monitoring the adoption of DeFi around the world, which appear to indicate that per capita and per consumer spending power, a place like Malaysia is ranked quite high in terms of adoption of DeFi. Can you tell us whether this concerns you in terms of other crypto assets, to use Francois' phrase?
So, like I said, one of the things that we have done was to form an MOU with the Securities Commission, understanding the different use cases of digital assets, and to also design the appropriate regulatory framework, and also the kind of data that should be reported to both the Securities Commission and the central bank, in order for both regulatory authorities to understand the extent of risk of these activities we pose to each regulatory authority's mandates. So we have that in place, and that has helped us, keep track of the developments. We have also, together with the Securities Commission, invoked the anti-money laundering law on such platforms, where they are also required to report suspicious transaction reports if they find that there are transactions that meet the criteria of what is a suspicious transaction, and report that to the financial intelligence unit. So this is an evolving area, but like I said, what is more important is, for the relevant regulatory authorities to sit down and recognize that this is an area that, both the regulators and even the industry would need to learn as we go along. So adaptability, keeping an open mind, have some humility in terms of, recognizing that there's a lot of things that, we need to learn, and keep the channels of communication open, like what, some of my colleagues have said, a two-way dialogue and engagement is something that is warranted in this area.
Yes, well, certainly, a strikingly large proportion of the DeFi activity right now does appear to be happening in Asia. It really does appear to be taking the lead in a lot of the innovation there right now. But I'm curious, I'd like to ask, in relation to both Mexico and Brazil, perhaps you can tell us, Governor de Leon, how you see DeFi playing out in Mexico.
Thank you, Gillian. And I think that clearly some of the possibilities offered by DeFi, which is a decentralized approach to providing these financial services, offers, I would say, huge opportunities, but also a lot of things to be mindful about. Some of the benefits clearly are to providing additional services in a way that could allow us to have more financial deepening. As you know, fixed costs have been a problem in emerging markets to provide financial services. And this is a way to actually get to a larger population in an efficient and a low-cost way. But also we need to be mindful and ask ourselves, do we really want to circumvent other sources of trust that are in the system, either from the authorities, from the institutions, and so on? So looking at the right complementarities and positive externalities from these new technologies and the service that these new technologies can offer, I think it is a key challenge, and to identify that intersection where the public good could be pursued. And in concrete terms, it is still more an open area to be developed. We, as you alluded to, there has been more progress in Asia in this regard. But I think we need to strike the right balance between profiting from these technologies and offering new services to new customers at a lower cost and in more efficient ways that could be also used by some of the financial intermediaries or some of the previously existing stakeholders, and also new entrants. So it clearly reduces the barriers of entry to a system that has been very concentrated and that can certainly put to good use the oxygens from these new technologies.
What is the Banco de Brazil doing in this respect? I mean, do you have much adoption of crypto assets in Brazil?
Well, first in relation to the DeFi world, it's amazing because we have our own innovation lab at the central bank in which we basically collect projects from time to time. I would probably say now, out of every 10 projects that we get, 7 or 8 are DeFi space. A lot of them are linked to blockchain technologies. And I think at the end, it's getting to be more and more interconnected with the new means of payments. And I agree with Francois, by the way. I think it should be called crypto assets. And there is one other thing on that comment, which is if you look at what's happening to these crypto assets, there's an increase in trading. There's an increase in people buying for as an investment, But if you look at the use in terms of means of payment, which I think it's essential for currency, in Brazil it's not growing at all. And I look at a lot of countries and it's growing very, very slowly compared to the growth in terms of being used as an investment. So I think it's an important point. Also, I think I can add here, I have a view on stablecoin that, you know, when I look at stablecoins all around, I see at the end that it's if you don't do a stable coin that's just one currency, and that in that case is fine. But when you look at trying to achieve a very, very wide stable coin, I think it becomes a bit like an ATF. And you have all the problems that the ATF has, because as you go larger and larger and include more assets, and you look at the bigger ATFs and the tracking error, it starts to be bigger and bigger and bigger. Why? Because the process of building a stable coin backed by a bunch of assets is the same as building an ATF. And when you become very large, you start to have all kinds of problems. You know, you're going to have a differentiation between the asset that is in the stable coin and the one that is not. Can you imagine if you go into the project that was mentioned from one of the big techs in which they want to have actually positive remuneration? So you need to buy things that have yield. Can you imagine going into that in a very wide base? It's probably going to be an ATF that will create all kinds of distortion in markets in regards to the assets that are in and out of the basket. So I don't think it's very viable when you look at the potential of growth, unless you're talking about something that is just based on one currency or two. And in that case, if you grow two, you're going to start differentiating between the currencies that are in and they're out. So I would like to point out this problem. And then at the end on the DeFi space, I think the best we can do is to try to participate in some way in the growth of the DeFi space. So I think when I look at here from Brazil, I try to participate in the innovation lab. So I try to be included in the projects to understand what kinds of projects are going on. They're all based on segmentation of intermediation. All of them, most of them, they at some point they attack some segments. So it is going to be very good for segmentation, and I think it's going to interact very well with open finance when that happens. And then my last comment on DeFi is that relates to the other question, which is the production of data, and I think that's probably one thing that concerns me the most, which is there's a lot of data being produced. There's a lot of financial transactions being done on this space, and more now with blockchains and using some other technology, especially when you look at cross borders, and we are not seeing that very well. So I think most of our debate now goes around what was called data gap, and I think it's very important to have cooperation between all the central banks and to try to understand what can we do to participate more. And I think one way in which you can participate more is to be involved in the digital process that it overlaps all these systems. Thank you.
So basically get your hands dirty and experience it to understand what's going on, and actually see the flows, or do what's sometimes called on Wall Street a bit of price discovery in a practical sense. But I'm curious, I'd like to ask you from the perspective of Brazil, and also ask the same question to the Mexican and Malaysian central bank governors. Given that so many of these new DeFi companies and big tech groups are headquartered in countries outside your borders, how much cooperation are you getting from the authorities in the home countries to track this? I mean, are the American authorities being open and cooperative? We can ask this because they're not on the call, or the Swiss authorities, or even at some point in the future, the Chinese authorities, Central Bank of China. Are you getting all the data and cooperation you need to effectively supervise and track this from the home country regulator perspective? Perhaps we can hear from you first in relation to Brazil, Governor Campos Neto, or then hear also then from Mexico and Malaysia.
Well, I think one thing that we have among central banks is a very good cooperation. So when I compare the environment that we have at BIS with the environment that, for example, ministers of finance have, we have a much better environment in terms of cooperation. We talk to each other. I think it goes beyond that. I think it goes to the point that we are not even structured in a way to cooperate. So we don't have entities that crosses all central banks as exactly for that. When I look at, for example, the case of WhatsApp in Brazil, which is and which is was very interesting because they wanted to do it, and I think the same happened in Mexico. Alejandro perhaps can say that after, but they started to operate, and the rail was leading to a very uncompetitive solution, and we blocked them, and we said, you can't operate unless you guarantee me that every credit card company can get into your rail in the same way. And eventually they did that, and we opened. I think these experiences that we had, and I look at what happened in Mexico at that time, and I think we could share more. So I think perhaps it's probably we are involved in so many things in financial intermediation at this time that we are not exploring that. But to answer your question, we don't have a lot of cooperation, but I think it's not because they're not being cooperative. I think it's because we are not fostering that.
Right. Well, it comes back to the point about institutional mechanisms and the structure of oversight and dialogue and debate, which Governor Nod raised several times in relation to the FSB. And I'm going to come back and ask you about this in a moment, about the FSB. But first, I'd love to hear about the situation in Mexico and then Malaysia.
Yes, I agree with Roberto that we have a very strong cooperation and communication among central banks. Probably this topic has been the new topic or the new kid in the block, in the sense that big tech has been in many countries like in the Wild West. It is out there, but not necessarily fully into the financial domain. So it is there, but not fully part of. And also, I would say that there are very sharp differences in terms of payment systems among our countries. And probably this has been part of the back office for all of our central banks, the kind of stuff that it's not our bread and butter when we meet and talk to each other. But it's been gaining tremendous relevance. I think the changes in technology are literally transforming payment systems in a very dramatic way, and how money works and how our functions interact with that. And so that is changing things. And just to put an example, not every country has a retail RTGS system that could maybe easily plugged in or develop CBDCs. In the case of Mexico, it's very peculiar to have, for historical reasons, developed in-house by the central bank some of the key or the anchor payment systems. This is not necessarily the same architecture in other places. So sometimes the communication, it is path dependent or is country dependent. And so there are not so many intersections in concrete stuff. But I think we're overcoming that. And at the FSB level, at the BIS level, we're really venturing into understanding better how the whole global ecosystem is interdependent of what we all do. If we get a bad design on a stable currency or bad regulation or in a crypto asset, I fully agree with Francois. These are assets or solutions, not really coins or even currencies. At the end of the day, I think this is clearly the area where we need to cooperate more and to have a better understanding on how we can provide the public goods that we provide in terms of money and stability as central banks in the best way. So it is a great opportunity for cooperation, and it is, I think, a great challenge.
But just to ask, I mean, a group like WhatsApp is obviously, American-based. Do you have that kind of cooperation with, say, the SEC or somebody else?
Well, I would say that we have indirect cooperation. We don't have the formal channels of cooperation for this. Even, for example, in the USMCA regarding cloud computing, and obviously it is a topic. We need to have the availability to have the data being in a place where we know that there is resilience and it is not based in another jurisdiction and we're subject to other type of elements. So there is always tension, because obviously economies of scale point towards massive concentration of these databases. but that doesn't guarantee operation on a standalone basis at the national jurisdiction level. So there is always tension there, but I think there has been a lot of cooperation, and even in the USMCA, there are clear items in terms of how data should be used, processed, and so on.
Right. I mean, Governor Yunus, excuse my ignorance, but I don't know. Are the big tech companies that you're dealing with in Malaysia mostly headquartered in the US or in China? And to what degree do you get the collaboration with either home country there?
Well, they are headquartered mainly in our neighboring countries, and the thinking is to leverage on the existing home and host supervisory arrangement that we have with our counterparts in the big tech home countries. So, but having said that, while existing supervisory arrangements are a useful platform to understand potential risks, there is also one limitation that we must acknowledge, that the extent of collaboration and information sharing is only applicable to the regulated entities within the regulatory purview of each central bank or supervisory authority. So anything outside the sphere of regulation would not be captured. Since not every part of the big tech firm's activity is directly regulated by the central bank or the supervisory authority, so there will be concerns that risks may arise from their non-regulated or non-financial related business and the spillover to their financial business. So like what Francois said, for us, one of the things that we have done to mitigate this is to ring fence and to require the setting up of the financial holding company and to designate that entity that has control over the licensed institution. And this then will allow us to subject that financial holding company to some regulatory framework and to subject them to our supervisory regime. So, but at the international level, this is talking about the big techs. But another area that warrant further attention is the oversight of the stablecoin arrangement, because they have different components of that. So a stablecoin have different components, and the arrangement may be unbundled and can be performed by different entities operating in multiple jurisdictions. So this adds another layer of complexity and challenges for authorities to ensure effective oversight and supervision of stablecoin arrangement, given their borderless nature. And this is an area which I think that the FSB is well suited to see, what kind of arrangement that would be useful, especially at the international level. If we do come to a point when there are systemic global coins, stable coins that have the cross-border nature of such instruments, and the kind of supervisory oversight, the kind of arrangement, the kind of sharing of information and risk assessment is something that I think we should think about because of the potential spillover effects, and most importantly, to allow the home authorities and the host authorities to be able to understand the risk and to take the necessary action to mitigate that risk through their respective financial systems.
I'm curious. I'd like to ask you, Governor Nut, from the perspective of the Financial Stability Board, I mean, stablecoins are really quite a nightmare in terms of central banks and coordinating central banks. So I'd like to ask you a question, which, since you are Dutch, I don't apologize for being blunt. Is it time for the FSB to just try and call for them to be banned?
Well, I mean, listening to this debate, allow me to make a few comments. The FSB, of course, is not a supervisory authority. It is a body where competent authorities meet and participate and cooperate, but the competences remain with the competent authorities. The FSB works on issuing standards and agreeing on regulation. It expects its membership to implement these standards, to live up to the standards. It has processes in place to check whether the standards are actually being complied with. And it has also a standing committee that is very much focused on supervisory and regulatory cooperation to signal whether there would be sort of impediments in supervisory and regulatory cooperation. The situation, as you sketch it with crypto assets, may not be all that different from, at least from an institutional point, from the situation with CCPs, central counterparties. Also there, we know that they are sort of, they are in a few jurisdictions. And of course, CCPs sort of offer services across the globe. And after the financial crisis, there was the previous crisis, there was a big debate about strengthening the resilience of CCPs. That debate took place at the FSB. The FSB took a sort of intermediary role between the major centers, major financial centers in the world. But at the end of the day, it was, for instance, the American authorities, the European authorities, and other authorities that then found a regime that was based on mutual recognition and equivalence to sort of deal with this situation. Now, on crypto assets, I guess that's a similar role that the FSB would take. We have our assessment of vulnerabilities group, which is clearly a monitoring group, which would signal the risks to financial stability emanating from this, from these activities. If we felt in this group that there was a sort of lack of regulatory oversight, which was becoming a risk in and of itself, then there would be strong advices to beef up global financial regulation, which of course would then have to take place or would then have to be executed by the competent authorities and the standard setting bodies at place. A question of whether this regulation could be so stiff that we would simply ban certain financial activities, that would of course be a very last resort measure. I mean, and probably it would be so far-reaching that would be left to the competent authorities. Of course, the FSB could at some stage come to the point where it would advise that these activities should be curtailed. But that's clearly not where we are. I mean, if you look at sort of what we've been writing about financial stability, that thus far we have observed that crypto assets do not yet pose a material risk to financial stability. Now, that may sound a bit complacent, but if you objectively look at the fact, I mean, the activities as a percentage of the overall financial activities in the world are still very limited. The volatility that is there in crypto assets as of yet has not really spilled over to volatility in the other parts of the financial sector, so it's relatively contained. And also in those financial activities that are very pertinent to real economy spending and investment, but predominantly in the lending area, also there, the proportion of these crypto assets, stable coins, Defy, what have you, is still relatively limited. So objectively, I wouldn't say that we are at the point in which you could say that they form a material threat to financial stability. And as long as that is not the case, the FSB would clearly not step on the toes and on the competences of individual authorities.
Right, right. But I'm curious, and I want to ask the same questions to Francois. Is an alternative way of saying what I was really asking, that if you look at a country like China and the PBOC, as Governor Yigang just laid out, you know, the early process of DeFi and crypto in China was to not quite let 1,000 flowers bloom, but to let a lot of experimentation to happen. And now the PBOC essentially is centralizing things under its control to a much greater extent. So another question I'm curious about is to ask you whether you think that the FSB would be endorsing that kind of increasing centralization approach, whether you think that is the future for many countries to basically reduce the financial stability risks.
Gillian, I must say, I find this discussion about regulating DeFi and big techs absolutely fascinating.
So do I.
No, and I will give my answer to your question. But let me first say that there could be two extreme scenarios, which I don't believe in. But the first one would be prohibition or ban. And you raised with Klaas the question of banning stable coins. I think it would be a pity because big techs and obviously innovations bring things. There is perhaps one jurisdiction, which I won't quote, where there is a temptation of prohibition at present, but I don't think it's realistic. The other extreme scenario in the opposite direction would be a completely holistic approach worldwide. And when you criticize silos, we could dream of a DWO, Digital World Organization. If we were Bretton Woods today, 2021, which we are not, we would probably recreate IMF and World Bank, but we would probably create this DWO also. But we don't have the political conditions where we would integrate data protection, cybersecurity, all the aspects we discussed. But I don't believe it's realistic. And so I believe the right scenario, and following what Klaas said, is to build on the best which we have, that we have real financial cooperation. And Roberto and others said it, we have the BIS, we have the FSB. We enhanced this global financial cooperation in the last decade. And frankly, it resisted very difficult years for multilateralism in the last 4 years. So it's really what we have. It's why I come back to this issue of activity-based versus entity-based. If we simply say, let us take the FSB and all the bodies we have and try to have an activity-based approach of fintechs or DeFi actors, I think it will be extremely difficult because we don't know the border, we don't know how to deal with that. And I think that the idea of mixing activity-based and entity-based, it can seem technocratic, but it's a very real issue. It's at the core of your question. Could be a realistic approach. And that would be to say, in one form or another, I'm not very elaborate, but to say, if big techs or platforms or DeFi players become systemic, then they have to organize their financial activities. They are allowed to have such financial activities, obviously, but they have to organize them in a separate legal entity, a parent holding company, which is subject to international financial cooperation. And I think this is a realistic way. We are not yet there, but we would use the best of the financial cooperation to also deal with these new actors.
And I'm curious, again, coming back to the point that Klaas made earlier about who do you talk to physically? Are you talking at the FSB to people like the Libra or DM group, like, you know, the Circle, Ripples, Ethereum, Cardanos? I mean, who knows who you talk to in Bitcoin? But, you know, are you actually talking to actual financial sector, or actual private sector players about this? You know, because it seems as if the central banks are talking in one corner. It's not clear who you should speak to in terms of digital supervisors. And who on earth, you know, you might talk to the big regulated banks, but who do you talk to about actually in the DeFi or crypto world?
No, I can assure you, Gillian, that we have in our structure within the FSB, the Financial Innovation Network. It's a network, that's what the N stands for. And this consists of sort of our digital specialists from the membership, and it is also an interface to the industry. So yes, some of the stable coins that you mentioned have been presented to our Financial Innovation Network. And again, this was the two-way dialogue that I talked about in my introductory remarks. On the one hand, these contacts allow us to understand better and firsthand what is actually going on. But at the same time, of course, it's not a one-way discussion. From our end, we've also explained sort of the regulatory structures we are in, the pieces of legislation that we have to enforce, and what this might mean for these creators of, let's say, stablecoin or what have you. And I do think that actually these initial contacts that were there have also had some impact on, let's say, the way some of these stable coins have appeared in their second version, in their version 2.0, versus the first version that was presented to the regulatory community through inter alia, the Fin network. So yes, these structures are clearly there, and they are important.
Do you have DM or Libra in mind when you say that? Are they listening to you?
Well, it's not my role to pick out individual stable coins, but you're not bad at guessing. Let me put it like that.
Right. We're almost out of time right now, so I'd just like to turn to the three emerging markets perspectives, participants from Malaysia, Brazil, and Mexico, because although the role of DeFi and digital is very interesting in developed markets, it's really in the developing markets right now that much of the innovation and potential risks are occurring. I think. I'd like to ask briefly from each of you, perhaps starting with Governor Yunus. Do you think there are big financial stability risks right now around this? You have about a minute to comment on this.
Really, no. Although the growth rates is very rapid, but in terms of proportion of the activities to the total activities in the financial sector in Malaysia, it is still strong. It's still small. But because of the potential for them to grow very fast, very quickly, that puts us on our toes. And for us to be able to be in a state of readiness to regulate and intervene if necessary, if they do pose risk to financial stability down the road. And that is where all the things that we have been discussing today, having open dialogues, collecting the necessary data, having strong domestic collaboration is going to be important in order for us to be able to discharge our mandate in this environment.
How about the Mexican situation?
I would say that we are at an inflection point, and we need to get the ecosystem right and strong and not avoid fragilities. So we need to be mindful about every single detail. Otherwise, we will regret it. In terms of activity-based or entity-based, I think we need a blend of both. I think activity-based is what you do. And entity-based, and I think this is something we learned from the great financial crisis, it depends on your incentives. What is the corporate structure that you have and what incentives are behind? That is the reason why I believe it has to be a blend of activity-based and also entity-based. And let me just say a few words in terms of all of these crypto solutions and assets. I think we need to not lose ground, that we need to strive for public good. And sometimes validating crypto assets hungry for senior edge returns may derail us from that road. So I think we need to be mindful of even thinking about stable coins and as an extension of e-money, a new version of e-money. We used to think about e-money in the balance sheet of commercial banks. This may be a new version of e-money, but highly linked to central bank money. And I think that way, probably the public good could be attained in a better way. Thank you.
Roberto.
So I think in the same case of Malaysia, it's growing a lot, but it's still a small proportion of what we see and what we do. But the growth is very exponential. As to how is the correct approach to it, I'll probably go with actually it's a mix of entity and actually when I look at the way you interact these two, I think it's proportional to the risk. So the risk is what is going to tell whether it's an entity or not. And also, I begin to think that we should be looking at channels more and more. So because I ask myself, what is the channel in which people will do financial intermediation in the future? We are seeing more and more, for example, that the channel for selling some financial products like insurance, for example, is more and more to social media. So I think we should have an approach in which we also look at the channel that's being used, because having DeFi with different channels is blurring a little bit how we see this progressing. So I would say that.
Right. Well, thank you all very much indeed. It's been a fascinating conversation. It really has been. I've learned a lot. I guess if I was to sum it up, I'll simply say that what we have right now is a very rapid transformation in the way that finance is operating. It may or may not yet pose a financial stability risk. If hopefully the message from the panel is that it doesn't yet, it's not big enough. But I guess what is clearly a risk is the question that is around whether the supervisory structures and the structures for cross-border coordination can evolve fast enough to keep up with these very important changes in the financial sphere. I hope they can. You all seem to be confident that they can. But I guess the other conclusion I'd have is the Financial Stability Board, which maybe should be renamed the Digital WTO or the Digital Financial Stability Board, certainly has its work cut out for it in the next year. So good luck, Governor Knott, and good luck to all of you in forging a path through these very difficult tensions. Thank you.
Thank you very much. We will not shy away from the responsibility.
Well, as a Dutchman, I expect you to be very open and frank and keep the system honest. So thank you.
Thank you.
Goodbye.